Welcome back to Get Rich Education. We're having a lively conversation with MC Lobsher. He is a wealth expert with Producers Wealth, and he's the cash flow ninja. Now, we've been talking about the tax and other benefits of the infinite banking strategy, but I have learned that there is another benefit in where you can keep your money inside of the infinite banking plan and outside. You can sort of keep it both places at the same time and still get the benefits. Say you've got $10,000 inside your infinite bank. You can go ahead and deploy that $10,000 outside your bank into another investment. Maybe you're going to go earn an 8% return somewhere on the $10K that you took out. However, there's also the $10K that you're still able to keep in there somehow and say perhaps earn 6% on that. So are you mirroring that? You're sort of earning money in two places at once with the infinite banking strategy?
Absolutely. So I'll share with folks a quick story. When I had my first real estate mentor, and we're talking about 20 years ago, he was my first mentor. What he did in real estate in the 70s is he would take $100,000, for example, and he would actually go to a bank, and you'll get a chuckle out of this, Keith. He'll go to a bank and he'll put that $100,000 in the bank, because at that stage in the 70s, they were paying, double-digit interest rates. Right. So he would put $100,000 in a CD in the bank, and then he would go to that same bank and he would say, Mr. or Mrs. Banker, I just put this $100,000 in a CD in your bank, earning, let's just say, 10% interest. Can I get a loan secured by that CD from your bank? And they would say, well, we're in the business of deposits and we're in the business of lending. Of course. So they would give him a 90% loan. So $90,000 you would get as a loan from the bank secured by that $100,000. And let's just say it's at 8 or 9% at that point because of the relationship that he had with the bank. So he gets a couple of points below what he's earning in the CD. He then takes that $90,000, buys a property that pays him cash flow, appreciates in value over time, and he gets to obviously get the tax benefits and the leverage and so forth, and gets paid 5 ways, and then pays the loan back. So he had his money working in 2 different places. Now, how do you do that with a slight twist of better efficiency? Well, in the life insurance policy, you're doing exactly that. But the growth is tax-free in the policy, remember? In the CD, it wasn't. He would have been taxed on that growth every single year. In the life insurance vehicle, it is tax-free. And a similar setup, you would build up your cash value, which is the equity in the policy, establish a policy loan based on what you have in the policy, and then use that to go buy real estate. And your money's working in 2 different places simultaneously. And that's where our philosophies overlap. The real estate pays you 5 ways. The life insurance does 3 or 4 or 5 different things for you simultaneously.
Oh, I love that. That's a wonderful example. And MC, you talked about it a bit previously, but you want to tell us more about why liquidity is more important than ever for real estate investors?
Yeah, I think a lot of real estate investors realized in 2020 just how important it is to have access to liquidity, and to have access to it pretty quickly. So there was a lot of people that were shocked. I would say in March of 2020, because this is something that we didn't quite expect or thought that we would see in our lifetime. So there was a lot of uncertainty. There was a lot of there was a lot of fear. There was a lot of panic. And of course, the media that we have globally these days, they capitalize on this because this gets eyeballs and clicks. So they drive the fear and the panic even more, and you get hysteria. So during all of that, if you had access to liquidity as a real estate investor, you wouldn't have been having sleepless nights at that point of what your tenants may or may not do. Because you have to put yourself in the position of the tenant. So you would have been able to float your real estate, to make mortgage payments, to keep everything on track, even if there was a little bit of a hiccup with your tenant base, had you had that liquidity. And then, of course, markets go up, down, and sideways. And we have had an incredible run. I would argue since 2012 till 2022, and it looks like it's still extending by the looks of things. But at some stage, this run Markets are cyclical. The run comes to an end, and the exuberance of the market leads to malinvestment. And through every single downturn, those malinvestments gets flushed out. It's how the markets, kind of weeds out investors that didn't make good decisions at that point. And then the cycle starts again. So wouldn't you want to be in a position to have access to liquidity when the markets does eventually pull back, and take advantage of incredible opportunities and buy assets at a discount? So, we have heard a lot of things, in the past. I would say since I've been in this space, Keith, the past 2 decades, we've heard everything from the US dollar, and will the US dollar no longer be the world reserve currency?
Right.
And of course, the dollar's going to crash, and cash is trash, and all of those things. And I might have said some of those exact phrases that I just referenced to.
If you've been in this a while, you've heard everything from cash is king to cash is trash.
Exactly.
Yeah.
And I think cash has a place to play in every well thought out wealth strategy, a holistic wealth strategy, because, when you're looking at it from a strategic point of view, you look at assets and holdings that you have and capital that's positioned somewhere, and you ask yourself, why am I putting my capital there? And what is it supposed to be doing for me? What are the outcomes that I want? And what is it doing for me inside of my overall strategy? So a pool of liquidity, of cash for real estate investors, can help you through tough times, when there's tenants that's not paying, when there's stuff breaking in properties. And then when opportunities come up, when markets do pull back or soften, or there's a dip and you can buy assets at a discount, you want to have access to capital at that point, because the folks that do have access to capital, they're going to be able to pick up those assets. And the folks that do not, unfortunately, they're not going to. So liquidity is huge, and it's very important in a holistic overall strategy. In times where there's still a little bit of uncertainty. We're starting to get a clearer picture economically of what's going on. But at any given point in time, things can pivot. So you want to be positioned for that. It's a great stabilizing factor.
Let's talk about the amount of cash that it might be prudent for an investor to hold. And then secondly, ways in which they can hold that cash. I've often guided people, and it is good to have 3 to 5% of the value of your total real estate portfolio in liquid cash. That's just the real estate part of your reserve. So if you have $1 million in property, therefore you'd have 30 to 50K in liquidity. Oftentimes you want that in cash, but you can have it in other liquid things. For example, gold has had great liquidity in value for millennia. So if you want to hold the bottom 20K of your 30 to 50K in reserves for real estate in gold, sure, you might go ahead and do that. But why don't you talk to us about the amount of cash and then good ways in which to hold on to that cash? You sure want it to be liquid, or else it's not cash.
Yes, exactly. So, and you bring up a great point. I talk about the stable of horses that folks should have in place. I borrowed that phrase from a friend of mine, Francis Hunt, but you need a stable of horses where you position capital. So what you just mentioned too, gold. Yes, absolutely. Gold has been money for centuries. And being from South Africa too, we are still one of the biggest gold mining countries in the world.
Right.
Johannesburg is literally referred to as Egoli, the city of gold, right? The gold reef city. So you do want to have some allocation to that. It's a great hedge. It's wealth insurance. You do want to have some cash, and the amount. I think what you shared was a great baseline. What we recommend too is at all times a minimum of 6 months for your personal business and investing economy. We've raised that actually to 12 months, and personally, I've raised that even a little bit more than that. I think at certain times of investment cycles, you increase your position on cash, and in other times you decrease it when you're going shopping and buying discounted assets. So at least a bare minimum of 6 months, but I would say 12 months is actually will give you a good night's sleep. It's a sleep well account, and we position it in life insurance. We position it in the infinite banking system because we could get access to it very, very quickly. It's not a bank account that with an ATM card, but 48 to 72 hours you can have a wire right into your account, and you can have access to it. And one thing that you've spoken to about, Keith, is Bitcoin, and there's a place for that too. Very, very obviously a small amount of your portfolio, but that's sort of the three horses that we've recommended that people have. I jokingly refer to as cash as sort of your horse that it's your horse and buggy horse, your horse that just does everyday jobs for you. Not very, very attractive, but you need a horse and a buggy. And gold is sort of your war horse. When the shots get fired, they don't use horses anymore in warfare, but anybody that looks at old movies of World War I, even before that, they used a lot of horses, and there were different horses used for warfare in particular. Well, the war horse puts his head down, and it just keeps going. The shots get fired, and the war horse is very, very durable, very, very solid, and just gets the job done in that environment. And then you have the fastest horse, which in this case, I will say that Bitcoin is probably your sprinter, your racehorse, which could do, obviously provide a lot of upside potential for you and has a great inflation edge. So you should have a little bit exposed to that. But the stable of horses is a great way of looking at it, so that you're prepared for any scenario.
And when you mention one should have 6 to 12 months in cash, you're talking about to cover 6 to 12 months worth of their living expenses.
That's correct.
Yeah. So those are some different perspectives on cash, ways in which you can hold it, which is in dollars itself. MC and others choose to hold those dollars inside the infinite banking strategy. I bring up gold because it has a pretty stable pricing history as well versus some of the other things where you almost can consider holdings in gold as a cash equivalent. So some really good perspective there. We've been talking with MC Laubscher about how you can best manage your cash for tax efficiency and other things while you accumulate cash and form some capital for your next real estate investment or your next investment in anything else. MC, if someone wants to learn more about you and what you do with these holistic wealth strategies, including potentially employing the infinite banking strategy and everything else that you do, what's the best way for someone to learn about you?
For people that are interested in learning more about this infinite banking strategy, they could go to yourownbankingsystem.com. That's yourownbankingsystem.com. There's a presentation there that's about 30 minutes that shares the entire strategy and how business owners and real estate investors can utilize this to increase their cash flow efficiency. And then everything else is cashflowninja.com. We've got everything else there. And if they're interested in learning more about what we do there, they could just visit cashflowninja.com.
This has been a constructive chat. Thanks so much for coming on to the show.
Thank you so much for having me.